And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. We did experience another fairly volatile week, ending with Trump tariff talks putting a damper on the markets on Friday. But let's take a look at some of that economic data that drove price action last week as well. We did see job openings and factory orders decline, and that was generally good news for the markets. Today, we also got January employment data, and the unemployment rate fell from 4.1% to 4%. Not alarming. Again, it was those tariff news that pulled the markets lower today. And then also let's take a look at some of the news that is due out next week. We are going to get some key inflation data. CPI and PPI data will be due out. Pretty light relative to these most recent 2 weeks with some M7 names that have reported their earnings. We are going to get into that as we move through today's show because of their general impact. But for now, let's go ahead and take a look at the S&P 500 and the Nasdaq. You will want to be aware of where these markets closed for the week. And as usual, we will get beyond that. If you like what you've seen, go ahead and hit that like button at the end. I'd appreciate that. And as always, any comments are very welcome, as are questions. So let's go ahead and jump right in, take a look at these broader markets and see where did we close for the week. And here we are, the S&P 500 daily price chart. And you can see we had a very tough Monday. This was in response to last Friday's news as far as heavy tariffs on Mexico and Canada, 25%. As the week progressed, Trump did put a pause on them for 1 month. That did help and give a reprieve for the broader markets. But then today, more talk next week of retaliatory tariffs. So that is an uncertainty that the markets just do not fare well. You can go back to Trump's prior presidential period, and you will see when those tariffs really moved to the forefront, particularly with China. They were the target at that time. And 2018 into 2019, take a look at that Q4 period, and you'll see a lot of deterioration that was initiated by these tariffs. So you'll see as well that the markets are not going to perform well during periods of uncertainty. We like to see a broad-based economic expansion with earnings growth and interest rates falling. Any kind of rocking of that proverbial boat will put the markets into a period of possible deterioration, but we're staying on top of it here with the S&P 500. We did close back above this 50-day simple moving average. Now the RSI is positive, but you can see it's just clinging to that net neutral there at 51. So a little bit certainly precarious there, but net we are in positive territory. Also taking a look at this MACD, that moving average convergence divergence, that is going to be an indicator of momentum. And it is up here in positive territory and not particularly healthy. If we go back, for instance, to this August period in November, when the markets were clearly trending upward, we had that uptrend taking place. At this point in time, it is mostly sideways, indicating flat near-term momentum. Now, let's take a look at the Nasdaq. You want to be aware of the fact that we did close back below this 50-day simple moving average. We also have an RSI that has moved into negative territory. MACD here again is positive, but mostly flat. This is going to be a secondary indicator, but in the end, we are back down here in negative territory. As we move through, I will share with you the tech sector and other areas that are going to be highly impactful for this NASDAQ. Now, with that, we can move right on, and the 11 sectors in the S&P 500. And this is the 2-month daily price chart view. It's called Candle Glance. And what we are looking at is these 11 sectors sorted by the relative strength indicator, and it's in descending order. So in this upper left quartile, you are seeing areas of the market that are generally outperforming relative to these weaker areas down in this lower right quartile. So up here at the forefront, we do have XLC. This is the communication services sector, and you can see a nice uptrend. We are up here sitting at a new high in territory. The one big mover here in this group is going to be Meta Platforms. Netflix is also a key component that is helping this index stay up. We're also going, as we move through today, take a look at those two charts, but also heavyweight name Alphabet that got hit hard this week is also among those top holdings. So we'll share with you what the view there is as well. And then also up here at the forefront, financials. This is XLF hitting a new high here. Let's go ahead and pull up a monthly chart and I will share with you that view longer term. You can see we're sitting up here nicely at that new high. And a lot of that having to do with Trump's reduced oversight on these banks. That's going to allow them to put money to work as opposed to having to have these big defensive money to stem any potential losses. And then also a lot more by way of M&A activity that is anticipated going into the next 4 years. So financials sitting up here, we'll look at some of those names as well as we move through. And then two, you do want to note that healthcare, we talked about this last week, that this healthcare sector very decidedly did turn bullish. We did have an end of week pullback here, but we are now up above that 200-day simple moving average, RSI and MACD up here in positive territory. A little bit of a late week drag. I talked last week about biotechs. We're going to look at that chart and talk about that as a sub-industry grouping. And then also the healthcare insurance related group is under selling pressure as well. So moving through XLRE, we are seeing vibrancy, and this is another group that did turn bullish on Wednesday, back above this 50-day simple moving average. Take a look, that MACD just entering into positive territory, likewise with that RSI, so that those that are adept at looking at some of these REIT stocks, this is definitely an area that I will be focusing on over the weekend as far as adding names to the suggested buy list for my MEM Edge report. And then also we do have staples. Both of these areas as well as utilities are up here at the forefront. They are viewed as defensive in nature. And there are some names here in the staples group. We can see this area also turned bullish, pulling back a little bit back below that 50-day simple moving average. But again, that MACD just getting into positive territory, likewise with the RSI. Now, would I load up on these stocks? Probably not, primarily due to my move generally toward growth stocks, but it is of note that these more defensive areas are bubbling up to the forefront as these tariff fears begin to settle in. Now, also, you do want to be aware of the weaker areas in the broader markets, and let's take a look. Consumer discretionary back down below this 50-day simple moving average. Certainly, Tesla is going to be a big part of that. Amazon got hurt after their earnings release as well. But there are other areas, and I'll share with you those that are exhibiting weakness in this discretionary space with a negative RSI and MACD at this point in time. Now, let's go ahead and beyond these broader sectors, I'm going to share with you some in-depth information relative to beneath the surface and looking at these industry groups. Again, that 2-month daily price chart view, sorted by that relative strength. So up here at the forefront, we can see that the medical products, medical devices area is remaining at the forefront. A little bit of a late week pullback. We may see that MACD crossover, which oftentimes will signal, at the very least, a potential period of consolidation. We need only go back to this September period, and you will see that black line down through the red, signaling this period of consolidation. Once that RSI gets into negative territory, oftentimes it will precede further deterioration. But for now, we're sitting up here at the forefront, likewise with bank stocks. I talked about XLF, and this is KRE, the Regional Banking ETF. And they had a couple of items that were of note on the good news side. Again, regulatory issues are being pulled back, and then also increased merger and IPO activity is helping those major banks. We're going to look at some of those names. Also, taking a look, we are back above this 10-day simple moving average, positive RSI and MACD. So certainly firming up quite nicely here. Now let's take a look at biotech stocks. I talked about this area last week. It had turned positive above that 50-day and was on the lookout for a move back above this 200-day. Now we did get that on Wednesday, quite constructive, but the IBB group did end the week down about a half of a percentage point. We are poised for negative RSI and a potential MACD negative crossover. This is an area that is often tied to risk tolerance among investors, as many of these companies don't yet have earnings. So you are buying really on hope for a lot of these names, but there were some bigger names that I shared with you last week that did come out with earnings, had an initial pop. This is AMGN, had a very big move on Wednesday and then gave back a good part of that, most of it actually, on Thursday and Friday. We also, same news here with Gilead. I believe they are due to report next week, but same phenom where it marched to a new high and then gave back certainly a good part of those earlier in the week gains. Also taking a look at the sub-industry groupings, we'll take a look here at volatility. When you hear about these tariff fears and fears in the market, oftentimes you will see volatility, also known as that fear index. You'll see it spike. We are back down here at about 16.5. Really, when looking at this index, anything at 18 and above is viewed as elevated, indicating increased fear. So we are still sitting down here for now, indicating that the fear is not extreme, but certainly worth keeping an eye on. Now, also, we want to take a look at SOXX semiconductor stocks. This particular group was down a little more than 0.5% for the week, and it's another area that got hit on Friday. We are going to take a look at some of the names in this grouping, particularly NVIDIA, which had a very good week, up almost 8%, but elsewhere in the group, it's very, very mixed. And moving through as well, we do want to always, in this current environment, keep an eye on yields and interest rates. This is that 10-year yield. And you can see that we were in a nice declining phase going into Wednesday. And now we are inching back up. The yield on that 10-year is sitting here at about 4.5, which is considered elevated. Ideally, of course, we want to get those interest rates down further. Next week's inflation data may add more color, because a declining interest rate environment is good, particularly for growth stocks. I talked about consumer discretionary and auto stocks, but let's take a look at XRT. This is the S&P Retail ETF, and you can see that it has had a very tough period as far as going into the end of this week. I'm going to share with you some names that we talked about last week as far as add-on trades where one particular well-known company in a group gets hit, and then you will see other names also decline in tandem. And then housing stocks at XHB, of course, today's rise in interest rates didn't help this particular group. This is the S&P Home Builders ETF, and you can see that we had a downtrend reversal attempt that was met and declined. You can see it did find resistance at this downward trending 50-day simple moving average. And generally when that occurs, as this moving average declines, oftentimes you will see resistance occurring at lower and lower levels. So of note there. Now let's go ahead from here and take a look at those M7 names. You want to stay on top of this because last week the equal weighted Nasdaq was up 0.7% relative to the broader Nasdaq that was down 0.6%. In other words, when we remove those M7 names, the Nasdaq fared better. So let's take a look at what may have hurt the Nasdaq last week. And certainly front and center here is Tesla, down almost 11%. Very much in a confirmed downtrend. They did come out with sales numbers today that were weak. You can see that MACD now down here in negative territory, likewise with that RSI. This is a stock that had been on my MEM Edge report, but upon the release of their earnings last week, where their numbers were weak, I did remove the stock as a possible downtrend reversal candidate, and it did, in fact, as mentioned, deteriorate it quite a bit this week. Also down here, this is resorted by that RSI. We want to be aware of these bigger names because their earnings stories are going to say a lot about other companies simply because of their size and their spending power. So Microsoft, MSFT, this particular stock was down, of course, this week. And we can see that it too is having a negative RSI and a negative MACD. Of note is the fact that the company reported a slowdown in their cloud computing product, Azure among them, sales. And that is big news. So we can see overall the company is deteriorating. They also announced a big spend outlook for AI, which helped boost some of these AI companies that provide products to help expand the use of AI. And then also down here in this lower quartile is Alphabet. And this company also came out with numbers down 9% for the week. Now you can see this big gap down on very heavy volume on Wednesday and then continued deterioration. This is another case where cloud-related products did see a slowdown, but then also Alphabet announced a huge increase in their AI spend, which is one of the reasons that we are seeing NVIDIA sitting up here at the forefront. And the stock did have a nice 7.8% advance, but we are still in a downtrend. We don't have that positive RSI. We are poised for that MACD crossover, which certainly would be good news, but I will need to see more bullish price action elsewhere on this chart to get interested, and then also some news relating to improving fundamentals. And then also taking a look at these stocks that are in this grouping, let's take a look at Netflix. This is a stock that's been on my MEM Edge report, and you can see that we had a nice base breakout earlier in the week. My midweek report, I did advise that it was in a strong buy zone, and you can see we are continuing to trend upward with Netflix, and the stock is in a nice confirmed uptrend. And then we did talk last week about Meta Platforms, their strong earnings, and this stock is another name on my MEM Edge report that remains in a nice, strong uptrend as the stock continues to climb. From here, we can take a look at that weekly price chart, and you will see that nice longer-term base breakout with Meta, which is very constructive for the longer-term outlook for this stock. Last up, we'll take a look at the S&P 500, and this is a view that you can access very easily on Stockcharts.com, where you can download the S&P 500 members and look at those stocks either by performance. You can use options for any of these names, and then also I always like to take a look at this candle glance view because we are looking at an S&P 500 that was flat this week. We talk about a lot of uncertainty, but what is keeping this market elevated? And these are the names that are up at the forefront of the S&P 500. Again, relative outperformance, Boston Scientific, one of the names on my very reduced MEM Edge suggested holdings list. Also, I mentioned Meta Platforms is on our list. And then Fortinet also is on my MEM list. I believe I have 12 names on there, but they are very nicely represented. The point here is when we look at BSX, Meta, Starbucks, and then FTNT, you can see it's a nice broad-based rally. Costco has been in a nice uptrend up here at the forefront. And then I did talk about bank stocks. Let's take a look at JP Morgan, and you'll see that the stock had a nice advance earlier in the year due to earnings. It did experience a nice base breakout, period of base building and then a new uptrend here. This is, again, talked about these bank stocks really being able to excel in a less regulated environment. And then also, as we move through, again, you will see a nice broad representation here as it relates to sub-industry groupings. And this is, of course, what we want to see. Again, of note, if we take a look at these stocks, every one of them will have been propelled into an uptrend because of a strong earnings report. Let's take a look at Visa. And this is a company that came out with very strong numbers and entered a very healthy uptrend. So that is certainly of note as well. Not unlike some of these other names, T-Mobile did help, came out with good numbers, gapping up now in a nice space breakout. So it's an exercise that really doesn't take long, but it is very, very telling. And I also wanted to review again, last week we talked about how Decker's earnings report did in fact impact negatively a number of other footwear companies. So here we are with Decker's gap down and then a continuing deterioration into this week. And from there, I did note that there were other companies that did not report earnings but suffered and pulled back as well. This is Birkenstock, BIRK. And this week we did have SKX Skechers reporting down 13% in response. Now, a lot of this is not weak earnings, it's a weaker outlook than anticipated, and they are getting punished. So in line with that move where we have follow-up plays where companies report weak earnings, you'll see deterioration in other names in that group, even if they haven't reported. Let's take a look at a positive version of that. And we are going to be looking at AFRM. And this is a stock that was on my MEM Edge report back here. After it broke below that 50-day, we did remove it. But let's take a look at their price action today, up 22%. Affirm Holdings, if you're not familiar with the company, they are a buy now, pay later organization, and they had a stellar holiday season. And you can see this gap up into a base breakout, super nice volume, and that MACD just entering into positive territory. So from here, I wanted to share with you some of these other companies that are also in that payment processing. I shared with you Visa, for instance, also payment processor. So we can look at other affiliated companies that are poised to potentially benefit from this move into Affirm and some of these other payment processing companies. Here we are with Shift for Payments, FOUR. We had a nice breakout, pull back to that 21 and back into a nice uptrend. Another stock that I would keep on your radar is going to be a little bit smaller. Let's take a look at CTLP, and this is that sympathy move that I talked about. Now, this stock is smaller in market cap, so you are going to experience more by way of volatility, but certainly it is of note that that MACD is just getting into positive territory after today's 13% advance. Another company that is in this industry group that is due to report, and actually FOUR will be reporting in less than 2 weeks, but another sympathy move with a big move higher. And then last up, we'll take a look at a larger cap name that's better known, and that is Discover Financial Services. We had this big gap up, move higher. We are now in a period of much needed consolidation after this sharp advance, but keep an eye on this stock as we could see further upside. Again, that payment processing area really exhibiting quite a bit of vibrancy. And that is it for this week. For those of you that haven't already, go ahead and use that link below. You can trial my twice weekly MEM Edge report for a very nominal fee, keeping you on top of those markets and getting you in front of those outperformers. Have a great weekend. And again, if you like what you've seen, go ahead and hit that like button, and comments are welcome. Have a great weekend.